Here we go. Today's social climate, Matt Anderson, Labor Day, Memorial Day weekend. Beautiful weather out there. Hot, hot, hot. Summer's right around the corner. Today got a little Al Di Meola playing. I don't know if you guys will be able to hear this tune, but it's a good one. Anyway, what I'd like to discuss today, we discussed Donald Trump and the Trump bond that he has the markets in. And we saw a little bit of this over the week where Donald Trump raised tariffs 50% on the EU, and then over the weekend, he took them off. He delayed them by another 30 days. I told you, this is going to be a continuation throughout his whole entire term. He's just going to be a trauma bond narcissist. That's what he is. And this is what we're going to see. But the markets really didn't do much when he announced all this. Gold went up a little bit. Markets went down a little bit. I think the boy who cried wolf is kind of happening with Donald Trump right now. He's kind of losing his luster as far as the market manipulation and the trauma bond. I mean, after all, this is supposed to be about making America great, right? It's not about his trading strategies when he moves the markets like Moses moving the Red Sea, right? So he shouldn't be worried about this. But as I said, he is a narcissist, and we will see these markets. He'll do something more drastic this time. Like a good narcissist, he will do something more drastic to get movement within this market. He's got to do something more drastic. Because, again, like I said last week, his cronies and his associates are making billions of dollars off this market movement. You could go long and short, and I talked about all this, and make a killing. So that's what he's doing. We'll leave that aside. But for now, I just want to briefly discuss speculation versus investing. Now, speculation are instruments like Bitcoin, cryptocurrencies, gold mining companies. You could even make the argument that even gold major mining companies are speculative because they're just shitty businesses. And investments are instruments that are like blue chip companies, Hershey's, Nestle's, ExxonMobil, gold royalty companies, oil and gas royalty companies, safe, beautiful cash machines that have a return on equity that's high. They have low debt ratios. They make tons of money every year, and they pay out dividends to investors. These are investors. Rental property, all of these are investments. Now, the key to investing is to buy investments at a discount. You never want to buy investments at full price. I mean, you can, but you're risking your capital when you do that. So you really don't want to buy investments at full price. You want to buy them at 20% off to 50% off, and most preferably you want them at 70% off. This is how you get rich using investments. Now, I suggest that you read Benjamin Graham's securities analysis to figure out what an investment is and how to buy an investment at a discount rather than at full prices, which is what 90% of the participants in Wall Street do. They buy investments at full price. They don't buy them at a discount. They don't want to buy them at a discount. They want to follow the herd. When you look at the humans out there, all the people that swim in the herd, they think alike. You got to think outside the box when you want to become a wealthy investor. You can't think like the herd. You can't buy Hershey's when it's fully valued. You don't want to buy Apple when it's fully valued. You don't want to buy Nestle when it's fully valued, or McCormick Spice Company, or any of these great investments when they're fully valued. You want to wait and be patient and buy them when they go on sale. Now, as of late, we've seen Hershey's kind of going on sale. So, blue chip company, excellent company, probably trading 20-30% off the highs. So, there's stuff that's always out there that's trading at a discount, but most people don't do that. They want to follow the herd. What's the popular investment? I got to talk to my financial advisor over at Morgan Stanley and ask them what the mutual fund I should be investing in, what index fund should I be investing in, what ETF should I be investing in? What pays me the highest return? And I don't care what I pay for that instrument. I just want the return right now, along with all the rest of the suckers out there. You have to buy, and you will learn this if you read the book Securities Analysis. You buy at a discount. This is how you become wealthy. You don't never buy full price, because when you buy a full price, there's a chance that you will lose your capital. And the number one rule to investing is not to lose your capital. So you don't want to buy full valued assets, investments. Now, as far as speculation, there's only, okay, let's go back. This is how you become rich, by buying investments, rental properties included, businesses, everything. You buy cash producing assets at a discount. You hold these assets. You compound the wealth. You compound the returns. You have a very low probability of losing your capital, your investment capital, into these investments. And you be patient. And you just sit on the sidelines and you let the money work for you over the years. And so this is how you become rich. Now, in order to grow these investments, I don't know all the multiple ways, but I'm going to name 2 ways, which are the most popular ways to do this. Number 1, your monthly income minus all your expenses, all expenses, even travel, food, entertainment, electric bill, all of that, mortgage, car payments. Income minus expenses equals net income. You take your net income, you reinvest it into successful businesses, you compound your wealth over the years and become wealthy. This is investing 101. Now, the other way you can grow your investments is by speculating with speculative instruments in the marketplace. Intelligent speculation. Now, this pertains to things like Bitcoin, cryptocurrencies, which are not investments, they're speculative tools, gold mining companies, AI stocks, pot stocks, all of these instruments that increase in value quite significantly if you buy them at the right point in times. Now, these are hard to do. You have to time it properly, and you have to know what's going on. So, I'm going to give you an example. As of late, a couple weeks ago, I had a bunch of call options on Franco-Nevada, which is a gold royalty company, the best gold company in the world, Franco-Nevada. Because I saw the trend of gold rising. I saw gold going up from the latter half of last year into the beginning of this year, and it just kept increasing. And I said to myself, you know what? Donald Trump's coming in the office. This guy's a controversial character. He's like the WWE wrestler. He's going to do some crazy stuff. And I turned out the gamble, the speculation was correct. He did Liberation Day. He crashed the stock market 20%, and gold just skyrocketed. And I saw that coming. And so I bought call options on Franco-Nevada. I held those call options to after Liberation Day. I sold those call options right at the top of the market. Now, that rarely happens, by the way. You have to be very cautious when you do these things. But I did happen to sell it at the top of the market during this segmented time. I don't know. It's going to go even higher. But these call options, I sold them right out at the top. I profited $11,200 after tax, after my initial investment. 11.2 was the total profit. And I reinvested it into a oil and gas royalty company that was selling at a discount to what it was worth and paying a dividend of 10.25%, over 10% dividend. So this is one example, and there are many examples that I could come up with or you could come up with, but you got to think about this in your own life of how to make speculative profits, turn those speculative profits into investments, compound your wealth over the year, because that's your goal. Your goal is to buy quality businesses at a discount, compound your earnings, compound everything. And you do that through your net income that you make at your job or your business, whatever you own, minus expense, net income goes to investments. Compound wealth. Turns out over the years you become wealthier and wealthier and wealthier, and it's like a snowball effect. By the time you're 60 years old, you have a lot of money. I mean, you basically got so much money you don't know what to do with it all, right? So this is how you do it. I'm giving you some of the keys to the to the kingdom here. But the challenge is, there's challenges on both sides. There's challenges on buying investments at a discount and buying speculative instruments at a discount and kind of seeing the tea leaves on the wall, what's going to happen. You could do this through put options, call options. Those are great instruments, great speculative instruments. You can see a trend in, like, let's say, uranium stocks. And you could buy call options in Cameco, one of the greatest uranium companies on the earth. And you buy these things, and you see the trend of uranium going up. You buy the call options going out a year, and you sell the call options at some point during the rising trend, the rising tide. You cash out, you take your profits, and you put them into oil and gas or Exxon or whatever, some safe company, Hershey's. I always go back to Hershey's because it's a great company. And that's how you do it. That's how you compound wealth over the years. So think about these things. Think about these things. We'll get into this a little bit more as far as intelligent speculation. There's a way to do it. I'm not the most expert source on this, but there's a way to do this where you do intelligent speculation, where you lower your chances of losing money through speculation, and you also buy quality blue chip businesses at a discount. Not like 90% of the participants in Wall Street who buy quality businesses at a premium, but you buy them at discounts. And so you wait on this, and there's always opportunity with these blue chip companies. There's always something out there that's trading at a discount where you can park your money in and make a nice return. So intelligent speculation, intelligent investments, this is how you compound your money. This is how the rich do it. And that's just how you become wealthy. Stay tuned till next week. Hope you have a great Memorial Day. We'll talk soon.